Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005, still alive in 2026. Okay, today, Thursday, July 2nd, the end of the week. Thank God it's Thursday. It's over. Happy 4th of July to everybody. Okay, big news today though. The tide is turning. Okay, I can see it in the market. I can not just feel it in my bones, but I can see it in the intraday action that we are turning. The tide is turning, okay? And I'll tell you exactly what I mean by that and what sectors to look for going forward. And as you know, this video progresses, and if we have time, I entered a new trade today. We might discuss that as well. It's all tied together, okay? But first, let's talk about the technical picture. Guys, it's still bullish. We bring in the moving averages. We're still trading above the 50, okay, in red here. So there's nothing really more to say. We're getting into this consolidation period, which is very, very good. It's alleviating the overbought conditions that we had during this monster move higher. And technically speaking, usually when you have this kind of wicked rip to the top and it flags, it consolidates, it usually rectifies to the upside, okay? We usually go much higher. And I think we do go much higher in the days and weeks ahead, okay? Let's talk about the sentiment. We're still in fear. This is so beautiful. I can't stress this enough, okay? All the sub-indices, fear, extreme fear, and the breadth, all of this. Everybody's saying how bad it is. This is beautiful. The put call options, fear. I don't see a lot of, maybe this is neutral by now, but everything else is at extreme fear. So even if we do break down a bit lower, I think it might be a false break before going up, because then we're going to really get into the extreme fear. Everybody's positioned for disaster, and we're like really just consolidating at highs. And you know, on Thursday, my favorite sentiment indicator comes out, the AAII Investor Sentiment Survey, and this confirms it. Look, the bears are coming back, 42% bearish, and we just had 1 week of bulls, boom, back down below 31%. Remember, the average is 37% for bulls. We've been below average forever except last week, and the average for bears is 31. So this is a bearish market. If you look at it, it looks like this sentiment here looks like we're in a bear market. If you look at the past 4 weeks, not even close. Okay, this is why I'm bullish, very, very bullish. I see extreme bullish signs ahead. Everybody's positioned bearish, and I think it has to do a lot with Warsh. Warsh came out and said he's going to be hawkish, so rates went up. And you know me, you know what I think about that. I think he's not going to be bullish at all. Okay, I'd be surprised if one rate hike comes, especially since the inflation data is coming down. Okay, so we're going to get to that because you know the investor sentiment survey bearish, which to me is still a sign for the bulls. This is a extremely positive development as a bull myself to see this extreme negative sentiment near highs, okay? And, you know, how do I think the inflation number is coming down? Why, I should say, why do I think it's coming down? Well, we did have some macro, okay, today. Big day. This is the non-farm payrolls, okay? And it came in at 57,000. They're expecting 110, 111, I think, and they got below. This is perfect for the bullish case. It means that Warsh is probably not going to raise as much as the market thought he would, okay? But it also doesn't tank the market because it's consistent with like 2 to 3% GDP growth for the year, which means not hot at all. The economy is sputtering along nicely and not enough, not super hot to create inflation. And you know me, I don't think inflation is going to happen unless the government really prints money. Okay, that could happen later on because we do have extremely huge budget deficits. But as of right now, I think inflation is coming down, okay? And we see that in the oil numbers. The oil numbers are coming down. You know, the head count is coming down in jobs. I mean, it's just, this is like a perfect bullish scenario for stocks to go higher, and yet you see massive fear everywhere, okay? We also got initial claims, okay? Another macro point, 215,000. Basically nothing. Nobody's filing for unemployment. People have jobs. They're not filing for unemployment, and they're just sputtering around. They just feel bad. And they're, you know, the AI bubble is going to burst. All these bad breaths, all of that stuff is in the mix here at highs. This is beautiful for a bull. Okay, and this is why I see that the tide is turning. Okay, let's get to this point. What do I mean by the tide is turning? Okay, today the market was up, down, up. It was like they didn't know what to do, okay, with the numbers. We started up higher, and then we drifted down the whole day. And the reason why we drifted down is because of SMH, okay? The semiconductor sector went down 4.5%, okay? This is beautiful. I love to see this. We wanted to see the air come out of the semis and into other sectors, okay? And that's exactly what we see, okay? Remember, we talked about the heat map, or we have the heat map again today. Again, this is the picture perfect heat map for the rotation trade, where we're getting out of the semiconductors and the semiconductor equipment, okay, like the SNDKs, the MUs, NVIDIA, and everything else is green. Okay? Maybe Google, Meta, but look, Apple and Microsoft are up. Okay, you have healthcare up, you have everything else here. Consumer defensive, industrials are up, GE. You have all of these quote unquote value plays, or the big names that are up, the big value names, let's say, that are up, and the semi is down, which is beautiful. Okay, this is exactly what you want to see. You want to be in the sectors that are going to benefit from this rotation, and not so much in the chip sector. But because the chip sector was a leading sector, this minus 4.5%, was a drag on SPY. Okay, I felt SPY wanted to go up, but as long as chips are going down, there's going to be a drag. There's going to be a weight around the neck, an albatross around the neck of this market. Okay, which gives the bears more hope, because look, the bears still have hope here. This is a series of lower highs. Okay, we could go lower, and that would be beautiful. If we do go lower and we get a temporary bearish move, I would love that. I would love to load up on that, okay? And it will probably be because people are coming out of the semis. But I don't know how much, because how much lower. I don't think that might happen. I don't think we might get a huge move down. I hope so. But it's because, like, I see everything else catching bids, like the rotation trade, which is keeping up the market, but the semis are holding it down. So we look at the semis and we say, how much lower can it go? 1 or 2 days? Where will it consolidate? It's still bullish right at the 50. Look at that, SMH right at the 50. Okay, this might be it. We might get maybe a move below. Who knows? 1 or 2 days of this would be very, very healthy for the semi space, and that to go long. I'm waiting for this moment. I didn't get long on that, but yesterday we did buy NVIDIA, but NVIDIA is not really a semi. Remember, we talked about NVIDIA as moving into the large cap sector. It's not really behaving like a semi. Remember, NVIDIA was down during this whole move, and now it's barely down as the semis get crushed. So I don't really consider it a semi play, and it's at the 200-day moving average. So it's really at a confluence of like support here. So that's why we went long. But the SMH space is lower, okay, and approaching key support, which is beautiful. This is where you want to buy. And look, it really barely touched it, didn't really, but it got rejected. So this is very good, because look at what happened with SMH down 4.5%. The SPY held. Okay, it's flat. What if SMH stops and starts going up again? This SPY is going to rip into new highs, especially with this massive bearish sentiment out there that we see. It's fuel to go higher. Yes, I would love it if we got into the extreme fear. That would really like shake everybody out. But I don't know if it's going to happen. It doesn't have to happen. We can continue to rip higher. Let's get rid of the moving averages. But what I'm trying to say here, guys, is that I can feel the tide turning. The semis are holding this market down, but once they start stopping, once the drop stops in the semis, okay, if SMH, we don't know where it'll stop, but once it stops and consolidates, the market will stop going down, and we're going to get this breadth indicator here out of extreme fear. Okay, so that's what I love to see. Okay, I love to see this kind of strength. I was worried about how well the SPY will hold up as the air is getting deflated from the semi space, and it looks to me like it's holding up very, very well. Okay, so we saw here in the heat map that other sectors are catching a bit. So I like these boring sectors now that are coming out. Remember, yesterday we did a Nike trade, or 2 days ago we did 2 Nike trades. That's panning out because this is the Nike. Okay, so stocks that have good names, good brands, and are making money, still Nike destroyed it. Remember, it did 72 cents reported, and they were expecting 12. So they're really crushing it on the earnings despite all this negativity. So I think this stock goes higher going forward, and it is a play on the rotation trade. Okay, so we have this rotation trade working, and the other trade that I took today is another boring company, Sprouts Farmers Market. Look at it. After getting beating on earnings and getting crushed because everything else was going down as well with the market. So it has earnings coming up. Okay, so I bought some Sprouts Farmer Market here. I like the consolidation in going higher. I think that the first target here would be, not a trend line, but a horizontal one. Yeah, will probably be a covering of the gap here. So I'm expecting it to go to 101. Okay, so how did I play it? Just like I played it, I played half this position, which, I mean, the position that I did today was a half position, and this half position, I played it in the following manner. I bought the 80 calls. It's currently trading at 89, let's say 90 bucks. I bought the 280 calls, and I sold a 105 call. Okay, this is exactly the zebra strategy that we talked about, and I did it on January 15th expiry. So I have plenty of time till it's 6-7 months into the future, and these are the stats. And the reason I did it is that I wanted to mimic a stock. Okay, so the delta here mimics the stock. A delta of 100 means you are basically buying the stock. Okay, 1 for 1. Any change in the options price will be 1 for 1 with a change in the stock price going forward. Okay, up until, of course, 105, or my call here will be taken, and I will ride a half position higher. Okay, so if you see, it's literally unlimited if it keeps going higher and higher. I don't expect that to happen, but you never know. If we catch a bull market when everybody else is bearish, this is going to be a huge move higher. Okay, so, and the break even is just 5% higher, which is great. If you would have bought a call at the market, at the money, the break even it will be much higher. Okay, so let's say you bought a 90 call. Let's put it here. Okay, and let's just get rid of this guy. Remove and do this once. Oops, one quantity. Okay, a 90 call. Look at the break even. It would have to go up at the same expiry. It would have to go up 16% for me to just break even. Okay, but of course it would be cheaper. And the chance of profit is less than the stock. Remember, a stock would be 50-50 chance of profit. This is 35%. So I don't want the stock to go up 16%. I mean, it could go up 16%, and then I start making money. Okay, so this is why I want to mimic a stock without having to like make so much money to break even. Okay, so here let's sell the call at 105, and this is truly, look at the chance of profit is almost like a stock. Okay, so this is why. Oh, sorry, let's put this as one. It should be a bit less than the stock. Yeah, it was 45%. Okay, so 44%, slightly less, yet we have same stock exposure because of the delta here. Theta, almost nothing, which is beautiful. The time passage is not going to really affect this position, and our loss is defined. Okay, $3,000 loss for this trade. Okay, so I like it. This is exactly what I like, and only a 5%, 5.5% move higher to break even, and then we start printing money. I love it. This is why there's nothing perfect with options. Okay, you just have to know the right time to enter the right strategy. And for me, I think this is it, because I think I want to participate in the up move for stocks that have been beaten down and are poised for a big move. I think they go to 101, and I think Sprout Farmers Market, if this is a true rotation, will start going higher, will cover the gap and go much higher. I expect it around this range, the 120, 125 range by the end of the year. But if it gets there quick, I'll have to take profits quickly. Okay, so that's it. I sense the market spinning, turning. Okay, despite the fact that we have all this negative sentiment here, and we're at fear, and we're bearish like crazy. We still have good news, like the non-farm payrolls coming in weaker than expected, and initial claims doing nothing. Okay, so I love this. I can feel the tide turning. I see and sense and meta sense the strength in this market, especially with the SMH, the chips that were leading before. Oops. Yeah, the semiconductors are down big today. Down big. I love it. Still bullish. I love it. Even if I don't like looking at the moving averages are beautiful to look at, but if you want to see a cleaner move, this is still a bullish chart. You can fall down to here and still be bullish, in my opinion. Okay, so I'm waiting to see if this waterfall stops. This market is gonna rip higher. Almost for sure. I can feel it in my bones. Okay. Anyways, guys, happy 4th of July, and we'll see what happens next week. All right, the tide is turning. Later.